Good afternoon, everyone. Allison Skalberg here. We are here today with TrueLink. We've done webinars in the past with TrueLink, so we're happy to have them back. We've got Jim Wolverton here today with us, and we're going to be talking about enabling adults living with a disability to spend their own money and increase their independence. And they're going to be talking about the TrueLink account and some of the features and benefits of that account. So we're going to take a deep dive into that. So first things first, I always like to do a couple of housekeeping items. We are in webinar mode today, which means that we can't see you or hear you, but we know you're there and we are glad that you have joined us today. If you're joining us for the very first time, welcome. We're so glad you're here. If you've been attending our webinars over the years, we're certainly glad that you are back. We always invite people to put their questions in the chat box. We're going to get to as many questions as we can during the time that we have together today. If you wrote in a question already, I have them, and we're going to be going over those today during our meeting as well. So I always like to just do a brief intro on Consolidated Planning Group. We are a holistic special needs financial planning firm, nationally certified as Social Security advisors, members of the Special Needs Planning Academy, chartered special needs consultants. Our whole firm is nuanced in helping you plan for the future of your loved one with a disability. We put a lot of effort into our advocacy program and our webinars. We have a Consolidated Planning Group YouTube channel. You can find it by the little flower that you see on the screen. There are hundreds, probably over 600 webinars on planning for special needs on the Consolidated Planning Group YouTube channel. I myself am a parent. I have 4 adult children, 3 with disabilities. I eat, sleep, and breathe this. And these webinars and all of this education and things like that, it's just really born out of my own frustration is why is everything that we do so hard? Why are there so many questions? Jim and I were just discussing some of the stump the chump questions that I had. I always come up with the doozy questions, but anyway, I know a lot of you guys have questions as well. So next slide, please. So when we work with people, we talk about being a holistic special needs financial planning firm. Your family, when you're planning for the future, first you got to plan for yourselves and your own retirement, that 25 to 35 years that you might be spending in retirement. But when we have a child or multiple children with disabilities, things look a little bit different. We have kids that may not always, they may not sail off into the sunset. They may not launch. They may be with us for the rest of our lives and may have care needs for the rest of their lives. So careful planning goes into that. And then the special needs side of the house comes in where we want to maintain eligibility for state and federally funded programs. I'm talking about SSI. I'm talking about Medicaid. I'm talking about Medicaid waivers. And having money in the right buckets and making the right moves financially matter. And it matters to the point of you could lose benefits or lose, other things that you waited a very, very long time to get. So we help people put lifetime care plans in place, protection plans. We help people set up ABLE accounts. If an ABLE account is something that you have interest in, we definitely do webinars on that as well. And the National ABLE, I forget the name of it, but basically there's a National ABLE Information Center resource online, and it's also very valuable as well. We do future cost of care estimates. How much money do I need to fund a special needs trust for the future care of my loved one? We, again, are nationally certified as Social Security advisors. Just knowing exactly when and how to apply and what benefits are what. There are a lot of names that they throw around with the Social Security Administration, and some of them sound the same and they're not the same at all, and some of them sound very different, but they're the exact same program. It's very confusing, so we do a lot of educating on that. And so whether you work with us or you work with somebody else, work with a specialist that's specifically nuanced with special needs, and then you can ensure that you have money in the right buckets for the planning purposes. So whenever we're thinking about planning for your loved one, we think about developing a future care plan now. Don't wait until the crisis happens. Somebody dies, somebody gets sick, somebody is incapacitated. We want to think about it and have intentional thoughts and intentional conversations on building out this plan. And then, we can adapt the plan down the line. When some of the things that we think about transition for our kids, transitioning from high school to either higher education or transition programs. What does that look like? We suggest exploring those programs early. Sometimes there's wait list on that. Some of your counties, we have 18 plus programs. They have all different names. It could be life skills. It could be mosaic. There's so many different names out there. 18 plus. There's so many things. But looking at that and what is next, and we also really suggest people start touring transition programs, residential living communities, and things like that early. Getting yourself on the list and having the ability to say yes, as opposed to needing a place and not having anywhere to go because there's a very long waiting list. We think that that is important. And then, as always, we always want you to really carefully think about who are these future caregivers going to be. Their sibling is not always the right answer. Thinking carefully. A sibling that is close in age, maybe they want to get married, go to school, have a career, have kids of their own, maybe they have kids with disabilities. There's so many reasons why that might not be a good situation. We want it to be a loving situation, a loving relationship, not one that is obligatory or one of last resort because we didn't plan. So we want you to keep those things top of mind. I know we talk about that a lot. So having said all that, again, just a reminder, got questions today, put them in your chat box. Thank you for joining us today, and I'm going to turn everything over to Jim. Thanks for being here with us, Jim.
Thanks so much, Allison. I mean, that's worthy of a webinar in and of itself, everything she just covered. So, as you can tell, the Consolidated Planning Group is dedicated to education. It's something I'm also dedicated to, is getting this information out there. Please check out their YouTube channel. I have attended as many of their webinars as I can, and they always have great information on them. So, just as a brief introduction, my name is Jim Wolverton. I am the Director of Fiduciary Education here at TrueLink Financial. And what we're going to talk about today is kind of how the TrueLink card works, specifically with special needs trusts. And so we're going to have to cover kind of the background of special needs trusts. And even before we get into that, what benefits are we talking about? And like Allison said, she had, and every parent has, a very specific question, and I might not have all the answers. And so I do highly recommend that you put the questions in the chat. If I don't know the answer, we have experts on staff I can consult, and I will get back to you. So please provide your email address with those questions, and we'll make sure that we get all of your questions answered, even if I'm not able to do them live here on the webinar, because they tend to be, like Allison said, it's a puzzle and we're trying to put all the puzzle pieces together, and I might not have the correct information for your specific question for your specific program, but we'll do our very best to try to figure it out together, because that's really what we're about here at TrueLink. So yeah, enabling adults living with disabilities to spend their own money and increase their independence. That's exactly what TrueLink was created for. My bio is I am an attorney. I went to law school. I came out of law school and got into elder law. Elder law is the practice of helping folks maintain their Medicaid eligibility. And through the different companies I've worked for, I've educated attorneys on how to set up Medicaid plans, how to set up special needs trusts, and I've been brought over to TrueLink to help that education as well. So this is a perfect mix with you guys who are curious about learning and us who want to provide all that information, as Allison recommended checking out that YouTube channel because they do have great education. So hopefully we can add to that. So I guess before we get into we'll go back to this screen because it's better to look at. Before we get into the material today, I kind of wanted to set up what is TrueLink and kind of where did it start. So the origin story of TrueLink was Kai, our CEO, started TrueLink because his grandmother was having memory issues. And this is going to ring true for a lot of us who have older parents, where the grandmother was receiving solicitations from charities. Sometimes she was giving, money 10 times a day. They were looking at the accounts. They didn't want to take away her freedom to be able to spend money, but they wanted to put some limitations on that. Kai looked into it. There wasn't a solution, so he started TrueLink. That was just over 10 years ago. And so what he did is he created a product, which is a prepaid debit card that you can load money onto, and you can have buffers around it. So that's kind of how it started. So it makes a lot of sense where you have somebody who's being taken advantage of. You can turn off the ability to give money to charities or limit their daily spending. So it was a way to, she still has that financial independence to go to the store, but she can't be taken advantage of. So that is a huge safety net for folks that have memory issues. Well, it turns out that this worked really well with special needs trusts as well. And so as Kai went out into the industry, and that's how I met Kai about 10 years ago, is at a special needs trust conference where I was teaching, and he was rolling out this card. And so as time progressed, the TrueLink card actually was written into the rules around special needs trusts. And what the rules say, and we'll get into them here in a little bit, is if you're the trustee of a special needs trust and you're making distributions onto a TrueLink card that's properly set up that has restrictions on it, that money doesn't count as income. And we're going to talk about why that's so important. And so kind of the evolution of the TrueLink card went from protecting grandmas and parents with memory issues into one of the primary tools that special needs trustees use day to day. And so just a little insight, I'm fairly new at TrueLink. I started in February, and I've been going to conferences around the country and talking to special needs trustees. What they used to have to do, and I'm sure a lot of you can remember this, is if, let's say, their beneficiary that they're managing the special needs trust for wanted to purchase gas and they wanted to use funds from the trust to purchase gas, the trustee had to go to the gas station, write a check to the gas station, get a receipt for it to not to count as income and properly validate that expense for their Social Security benefits. So the TrueLink card takes away all that onerous having to be in person, writing checks directly out of the account. So there's been numerous fiduciaries, numerous trustees that have told me how great the TrueLink card is and how it has changed their lives and made their lives so much better. So hopefully those of you that are new and haven't seen what a TrueLink card can do, we'll walk away from this interested in using that for distributions out of a special needs trust. And what we're going to do here today, kind of an overview of the program, is I will kind of walk through public benefits at a very high level. And again, please check out the CPG YouTube channel. It'll take deep dives into all of these topics. Then we'll talk about special needs trusts. Again, that could take up a whole hour. Then I'll do a demo of what the administrative side looks like of the TrueLink card, so you can see exactly what that would look like if and when you decide to use one. So that's kind of what we're going to cover here today. I think that's all the housekeeping things I wanted to take care of. So the first thing we really have to understand of the importance of using a TrueLink card is government benefits and why people should use a TrueLink card to limit their income. And we're going to go through these again, very high level, not necessarily this is a deep dive into public benefits or again, great resources on the YouTube channel from CPG. But SSI, Supplemental Security Income, this is one that is really important, not just for the check that folks with disabilities get each month, but also the way that it opens the door into state community Medicaid programs and getting services that aren't necessarily always covered by private insurance. So for Social Security, for SSI, it is a needs-based program. So there's income caps and resource caps. The income cap there, we have that at 967 just because well, it's actually higher this year. It's 996, I think, where if you earn that much in earned income that's counted income, then the full benefit gets reduced down to zero, and then you lose your benefit. So you have to be really careful how income is counted. It's very complex. It's very nuanced. We're not going to get into all that. But you also can only have $2,000 to receive SSI benefits. So that's where the special needs trusts come in, and that's why they're so important to be able to keep our folks underneath that resource cap so they're able to receive the SSI benefit. And remember that SSI benefit, that $996 might not be, a huge amount that's going to be life-changing, but what is life-changing is it opens the door to community Medicaid and those community services in most states. So that's the area, that's really the reason why a lot of people want to keep their SSI, is to make sure that they're getting that community Medicaid, because in the majority of states you automatically qualify for Medicaid if you're getting at least $1 of SSI benefits. Then we have Social Security, SSA, which we'll refer to as just a classic retirement income. That's, that comes from work history. If someone works, they get to retire with that Social Security check. The amount of income that you get from that depends on your work record. There's no resource limit on that. And then generally, you're over 65 and you're starting to receive Medicare if you're able to retire on your Social Security, depending if you defer it or not. But generally, folks are receiving Medicare with that insurance. Now it says DI, this is where Allison and I had this question, is Social Security disability insurance. That's when you become disabled and you already have work history. And then the income cap there depends on whether or not you're able to continue to work. No resource cap on that. And then if you're receiving SSDI, generally after a 2-year waiting period, unless you're diagnosed with ALS, then you would receive Medicare after 2 years. So those are the government benefits. What we're really going to focus on here is SSI because it has that resource cap and it has those income restrictions that we want to maintain. Again, generally in order. Obviously, we want to get that check each and every month, but we want to make sure that we're getting those Medicaid benefits. I see you, Allison. So I
Yes,
see
I just want
a
to
number of
pause
questions.
for a second.
Please.
Because Jim, we have a lot of families that their kids were getting SSI and they switched over to SSDI or childhood disability benefits under a parent's record. And what they've heard around the water cooler is that when you switch over to CDB or SSDI, that it doesn't matter anymore. That $2,000 doesn't matter anymore. And that is not true.
Okay.
If you're interested in keeping Medicaid, or if you're getting a Medicaid waiver. If the word Medicaid is involved in your child's case, it still matters. The Medicaid guidelines, the resource limits for Medicaid still matter, even when they switch over to SSDI or childhood disability benefits. And so I just want to, it's kind of a myth buster and it floats around all the time. And I just wanted to make sure that people hear that. There are families that don't care about Medicaid. They're not getting a Medicaid waiver. Their kid isn't getting Medicaid. They don't like Medicaid. And if that is the case, then it's true. It doesn't matter when you switch over to SSDI and CDB. But most families, especially ones that are getting waivers or about to get a Medicaid waiver, you're going to want to keep that in mind.
Oh, that's great. That's great, Allison. And that just emphasizes how confusing all these overlapping programs can be. So it might not impact the childhood disability benefit, but because of the Medicaid side, you still have to consider all of these things. So thinking about folks that are receiving those Medicaid benefits, either through SSI or through a state independent verification, and we have to make sure that we're underneath those resource limitations, that's when the special needs trust comes in. So the special needs trust is really going to come in and we're going to put those assets into the special needs trust, depending on where they come from, either a first party, a third party, or a pooled trust, and they're not going to count as a resource. So what kind of person would need a special needs trust? Pretty much anybody that wants to maintain Medicaid eligibility because the resource limit is so low. So it's $2,000 unless there's exceptions, and that's generally for a house, one automobile, household property, personal effects, things of that nature. So generally everybody that wants to maintain benefits because the resource limitation is so low. But folks that are looking to receive an inheritance, back payments to Social Security, receiving gifts above $2,000. A lot of times we'll see folks that are in litigation, maybe a personal injury lawsuit that led to the disability. They're either going to receive a jury verdict or a verdict from a case or a settlement check. And where are they going to put that? Obviously, it's going to push them over the $2,000 limit. We want to make sure they're maintaining their eligibility because generally those settlement checks aren't going to be sufficient to keep them getting the care they need for the remainder of their life. I know Allison mentioned that they'll do, those calculations to see whether or not what the costs are for the remainder of life, and those can be super, super essential for budgeting. But generally, those settlements, we need to figure out, okay, that's going to be part of it, and we're going to supplement that with Medicaid or Medicare. So really important to make sure that we're thinking through all those programs. But that initial check, a great place to put that would be into a special needs trust. For a medical malpractice, if there's a divorce, and we want to make sure that we're maintaining eligibility, a special needs trust would be well there. someone's liquidating or selling a home, anywhere, any person that's receiving income or resources over $2,000, this a special needs trust could be essential. It's also a great tool to help folks, just like the reason why um, TrueLink was founded was to help protect folks who might be vulnerable to exploitation. And like Allison mentioned, let's think to the future. Let's think about someone who might be receiving benefits in the future. We can set up the special needs trust, and that special needs trust can then receive those funds down the road. So a lot of people could use a special needs trust that are maintaining their eligibility. Yeah, Allison?
So this question comes up all the time. We've got one in the chat box. What are the benefits of a special needs trust for a disabled adult who has a Texas able? Do they overlap? And we get this all the time. And I think that the word is they complement. And I am a believer. I have both the special needs trust and an able account. And sometimes it depends on what the situation is. So if the child is getting SSI, an able account can pay for things without a 1/3 reduction to SSI, such things as shelter or rent or that kind of thing. So there's a lot of things that an able can do. An able grows tax-free is tax-free distributions. It's more tax favorable than the accounts that you may have for a special needs trust. And so we do entire webinars. The thing is all of these topics are 10,000-pound gorillas, and we can have a webinar. In fact, we do on each of these topics. But we have topics on the able account, kind of going over what you can spend out of an able account, how it all works, and that kind of thing. And the special needs trust can make a distribution to the able account. And I call it, and I admit that this might be wrong, Jim. I call it playing the game. The special needs trust, the able account, this TrueLink account, it helps us play the game and win in keeping our kids covered by these public benefits. And so the answer is they complement each other and they're beautiful. Okay? And Jim, you add your 2 cents on that as well.
No, I think that's perfect. And it was funny, those the in-kind support and maintenance and why that's important. If you guys aren't aware, we're going to cover that on this slide. But what Allison's talking about are solutions that didn't even exist 10 years ago. So playing the game is exactly what she's saying, but using these approved solutions that have come on board to make life easier for these folks. And this came through advocacy of groups like CPG, of national groups, of special needs planners. Get involved, get out in your community. Like I said, TrueLink's been around for just a little over 10 years. Able Accounts came on board. I think we just did a 10-year anniversary of Able Accounts last year. So these are fairly new developments to try to make everyone's life a little bit easier in trying to piece all these different puzzle pieces together. So Allison's absolutely correct in we're playing the game. We're using the tools that we have, and we're trying to build a higher quality of life for our beneficiaries. So why do these distributions, why is it so complicated, and why are we doing them using able accounts, using TrueLink cards, putting money into a special needs trust? It's because we want to maintain that SSI eligibility and that SSI income. And so SSI, for those of you that aren't familiar with it, the way that it works is for every dollar of income that somebody makes it receiving SSI, depending on what bucket it comes into, their benefits are reduced. So there's the maximum you can get is $9.94 this year, and then it reduces either dollar for dollar after the first $20 for unearned income, $1 for every $2 after the first 65. Again, they don't make this easy, so they have all these random $20, 65, and then dollar for $2. And then what Allison was talking about was in-kind support and maintenance, which if you're helping somebody with their shelter costs, basically they put a cap on that of how much the reduction of SSI benefit is going to be. This is referred to as ISM or ISM. I mean, there's so many different complicated acronyms, and like Allison said, this slide itself could be an hour webinar. But basically what this says is that if you're paying for somebody's shelter expenses that's receiving SSI benefits, they're going to reduce that up to a third of that benefit. And this year, the math comes out roughly at $351.33. But that might make a whole lot of sense. If you have somebody who's living in a safe environment, let's say rents $2,000 there, we're going to pay for them to live there. It's safe, they're comfortable. That's a great place to live. And all we're going to get hit on that is the $351 reduction in the SSI benefit. we're cool with that. And that's why each case is so individual and it totally depends on the person of whether or not that makes sense. But what we're trying to convey in this slide is that if someone receives income, they're going to get their benefits reduced. And we want to make sure that we're not reducing their benefits down to zero. Then they lose their SSI, then they can lose their Medicaid, which can provide, resources like transportation services, adult daycare, specialized services, all the personalized type of case management they can receive through Medicaid that some people really, really rely on. So each case, again, totally unique, but that's why we're so focused on how are people receiving distributions, where's that money coming from, and how are we getting it to the beneficiary, either through a TrueLink card, ABLE account, or a direct distribution, or a direct payment of shelter expenses, and then taking the in-kind support and maintenance hit. So these are the items when you're doing the in-kind support and maintenance computations that will reduce a person's benefits: rent, heating, fuel, electricity, water, mortgage, real property taxes, gas, sewage, garbage removal. And up to 2024, food was on here. So you couldn't purchase food for somebody without receiving a SSI deduction on their in-kind support and maintenance. And before that, clothing was included on this. So you can see this empty box over here. That's where food used to be. And that was eliminated, thank goodness, in 2024. So now we're just talking about shelter expenses when we're talking about the in-kind support and maintenance deduction, should we pay for someone's shelter costs. So again, each case is different, but it might make sense to take that deduction to have somebody living in a safe and secure environment, which is always our goal. Again, we're talking about income. Income is so important because we're getting that reduction in public benefits for qualification. And so we've given you the PALMS citations here. So those of you that are new to this world, you'll get very comfortable reading the PALMS. That's kind of the rule book for special needs trusts and SSI qualification. PALMS stands for Program Operation Manual Systems, which is always a name that never made any sense to me, but we refer to it as the PALMS. And those are the rules. And that's where the rules exist on how to qualify, what's going to count as income, what's going to count as a resource. And basically, they're still updating to remove food from there. But basically, anything that someone uses for shelter is going to be deducted as in-kind support and maintenance as income. So get comfortable with the PALMS as you get into this, or definitely have a professional like CPG that understands the PALMS, reads the PALMS, and puts out education around them. So we've been talking about special needs trust, but we haven't defined what a special needs trust is. So let's get into that. You'll hear as you get into this world, people refer to these special needs trusts as all sorts of different things, and they kind of all mean the same. So a special needs trust, you'll hear that referred to as an S&T. You also hear them referred to as a supplemental needs trust, a disability trust, a D4A trust, and that's because of the subsection within the federal rules where these trusts were defined as an excluded resource, so long as they're obviously set up and managed appropriately. And D4C trust, that refers to pooled special needs trusts. So there's all sorts of acronyms that all mean the same thing. And these are these special needs trusts that have really particular rules around them. I can teach a 3-day course on this one slide. So again, we're at a really high level. We can take a really deep dive, and do check out that YouTube channel if any of these topics kind of ring true to you and you want to learn more about them. But the first type of trust that we'll talk about is a first-party individual standalone special needs trust. So I just added 2 different words to really define what that is. A first-party special needs trust is funded with money of the beneficiary, and that's why it's called a first party. That's their money. It's going into the trust. And the reason why we're using a first party special needs trust is, remember, we have that resource cap of $2,000 in most states, that we want to make sure that we're maintaining that Medicaid eligibility. So if someone has more than $2,000, they're not going to be able to get on Medicaid in most states. One trend that we've seen across the country is states are raising that limit. I think Michigan was the latest state to do it last year. California has reinstated their resource limit, which is 136, I believe. I haven't looked it up this year, but they did come back. They had an unlimited resource cap for a while, that really hit their budget really hard, so they brought back the resource limitation, but it's much higher than most states. So these are state-specific numbers, but generally across the country it is at $2,000. So we have to make sure that their money's going somewhere that's not going to count against that $2,000 resource limit. In most states, that needs to be set up under the age of 65. A court can create that if you have somebody under guardianship or conservatorship. Parents or guardian of the beneficiary can create that. And then the person, if they have capacity, can also create their own first party special needs trust. The reason, kind of the trade off that the states give somebody for a first party special needs trust is in the first party special needs trust, it has to say that if there's any resources left in that trust when the beneficiary passes away, that Medicaid is going to be paid back, whatever's left. Medicaid is going to send a bill to the trustee when the person passes away for all the benefits that that person received over their lifetime. And if it exceeds the amount that's left in the trust, well, then all the assets left in the trust are going to go to Medicaid. So I always think of that. That's the payback provision is kind of, the deal that the states are making so that those funds are not accountable resource. The income from the first party special needs trust is taxed back to the beneficiary because again, it was their funds that went in there. And then we have the sole benefit rule. So it is a really limited trust. Distributions, on the most part, and there are exceptions, but for the most part, can only be made for and behalf of the beneficiary. So for their benefit, the sole benefit is for the sole benefit of that beneficiary of the first party individual trust. Again, this is a very high level overview of a first party trust, but hopefully that helps you understand that when somebody does have assets above those resource limitations, they're under the age of 65, they are disabled, we can put those resources into a first party special needs trust. Those won't be counted against their eligibility. A third party special needs trust is a much more traditional estate planning tool. So the third party individual trust, that's a trust that's set up and funded with somebody else's funds. So that's somebody that's going to receive an inheritance from a grandparent or parent. Everyone can name that third party trust. If they want to put that in a will, that money is going to go directly to the third party trust. And because it's not their money, it's not as rigorous as standards and not as restrictive on the third party trust of what has to be in there. So there's more flexibility. That doesn't have that payback provision. What SSI is really looking for when they're reviewing these trusts, so you have to submit them to the different agencies, is what they're looking for is a first party money going into a third party trust. So that's really what they're looking for. They're looking for folks that are trying to avoid that payback provision by using someone's money to fund a third party trust that should be into a first party trust with all those limitations around the trust so the resources are excluded. Yeah, Allison.
So one question we have is, do I need a separate special needs trust for each kid with special needs?
Classic attorney answer, it depends. It depends on whose money is funding the trust. So if each kid it has money coming to them individually, then yeah, they'll want to set up their own first party special needs trust to make sure that those resources aren't counting against their eligibility. However, if we have someone that wants to leave them money, all three of them, and they want to leave that, we could set up a third party special needs trust with all three of them as beneficiaries. The trustee is going to have to manage that, and it could be a little bit more complicated. You might want to set up three individual third party special needs trusts, but it could be done.
And I just want to give my 2 cents. I have
Please.
individual ones, multiple kids with disabilities and individual special needs trusts for each of them. My opinion is it's a lot cleaner and easier is my thought. I mean, to each his own, everybody can do what they want, but I think it's just a lot cleaner.
I love having you on here. This is so great. Thank you so much. I can teach it at a high level, but it's so great to have somebody with actual real world knowledge coming in on the management of those. And then we have the pooled special needs trusts. And pooled special needs trusts are run by nonprofits. And basically, what a pooled special needs trust is just one large trust that pools all the money together of folks that everybody has their own sub account within that larger account. And so a lot of folks will choose to use a pooled special needs trust if they might not have the sophistication. They don't have a trustee that's able to manage that because the nonprofit serves as trustee. And for that, there's a master trust document. So you don't have to draft a first party special needs trust. You don't have to go to a lawyer to create a third party special needs trust. You don't have to find a trustee to serve in that role. You don't have to find a trust protector to come in and make sure that everything's being done appropriately, but you can use the nonprofit to do that. And so there's a master trust document that's generally already approved by Medicaid in your state, and generally they run state to state. There are some national pooled trust companies, but most of them are just run within the state. And then who wants to join that trust? They use a joinder agreement, which just think of that as a contract to get into the pooled special needs trust. And now you're underneath the umbrella of the nonprofit. They have professional fiduciaries that then manage all those sub accounts, and it does allow more portability and obviously efficiency of scale when you have a professional trustee managing both a first and a third party trust. So again, this could be a 3-day course. We did it in 10 minutes. So a lot of good resources on the CPG YouTube channel for a deeper dive in there. Allison?
Yeah, I want to just comment. Somebody said, are there recommended systems for tracking money spent and put in trust or able accounts? And, maybe my answer isn't great, but just keeping bank statements, receipts, records of contributions, distributions. Some people have a spreadsheet. There may be a software. If somebody's using one, you could put it in there. Banks keep a pretty good record on what you spend the money on. So if there's a bank account, I mean, that the bank statements are pretty solid. I don't want to say this to defray anybody from keeping records, because I keep good records and I think everybody should keep good records. Abel's came about in 2014, and I've never, since 2014, ever had anybody ask to produce the records. But what I think will happen is that one day the IRS is going to say, we've never checked on this, and they're going to check on everybody. So I think it's just a good best practice to have records for all of that kind of stuff. When or if you're ever going to have to produce them, you may or may not, you may have to produce them to the Social Security Administration. And so not having to go back and create 5 years of records or whatever is a good idea. So just keeping it as you go along. So what banks or name the entity that maintains the ABLE accounts? There are ABLE accounts all across the country. You can have it from any state, and you could have anybody else's state as well. So, we have a lot of people. We do ours through American Funds as the Virginia ABLE. You can have an ABLE account anywhere, but that lends itself, there is a Medicaid payback on an ABLE account in the state of Texas. And so one stump the chump question I get all the time, Jim, is, well, if I go and get an ABLE account in a state that does not have Medicaid payback, do I avoid the Medicaid payback? The answer is no, because it's governed by the state in which you live. So while it's true you can have an ABLE account from any state, if your state has a Medicaid payback, there is simply just a Medicaid payback. So there are different, some are through the state, there are some like through American Funds. There are some that have better customer service than others, and we can take that offline, and we help people with that. So, but it's and you can only have one ABLE account per special needs child, and that's not one per parent and then one per grandparent like you can do with 529Cs. It's a little bit different. So, like I said, I would probably watch that ABLE webinar or join the next one, but we can definitely help you and take a deeper dive on that. I just have a couple of other questions I want to make sure that we hit on. Is there an easy access to an ATM if we want to have cash for our person? This is a good question, and you might want to defer that to your next slides and tell me what you want to do with that.
Yeah, I'll show you. So on the TrueLink card, you can set whether or not that is an allowable transfer. So I'll show you how that looks when we do the demo. And as far as what system to use with the TrueLink card, we do have great reporting abilities using our software and our platform. So that can be an answer as well, and a lot of people do that.
That is awesome. Okay, let me see just if I have anything else. Oh, one person that wants to know about the TrueLink. I'm concerned about if this card reflects information to the credit scores or to the 3 major credit companies.
Great question. And I actually reached out to our card team to find that one out. So what happens when someone signs up for a TrueLink card is we do take their social security information just to make sure that we're in compliance with the Patriot Act to set up that account, make sure they're not a terrorist. But we don't report that. So they won't be reported. It's just for our compliance with the requirements of federal law to make sure that that person exists. It's a real person and they're not in any sort of restricted list. So real quick before we get into the demo, the distributions out of a special needs trust can be used for a lot of different quality of life things like recreation, medical care. Unfortunately, Medicaid doesn't really care about your teeth for some reason, so a lot of folks will their initial first expenditure when they receive some funds is to get their dental taken care of, glasses, hearing aids, things of that nature, transportation, education services, and all sorts of things can be used out of the special needs trust. And again, we're using the special needs trust to pay for these things directly because they won't be counted as income. So this is where the TrueLink card comes in. Is the special needs trustee will make distributions with a prepaid debit card onto the TrueLink card, and it really does allow folks to have that financial independence. And I think that's really the beauty of the card with the beneficiary empowerment. You don't have to wait for your trustee to show up to make payments if you want to buy a new TV, if you want to go out to eat. You don't need to have that. You can use a TrueLink card. If the settings are set appropriately, you can go do those things. With the trustee having oversight, that's the reason why that the distributions coming off the trust onto the TrueLink card aren't counted as income because the trustee is managing where those funds are being spent, and that was written into the POMs. It creates that ease of administration that we talked about, and it does create that protection because you can put a limitation on how much is spent on that card, and you can limit how much you're actually putting on that card so that folks like Kai's grandmother don't get taken advantage of day after day after day, and it's just a bottomless pit of it's kind of a honey pot for a scammer to get into. So that's really the beauty of the TrueLink card. This is the POMs that named the TrueLink card as a resource, as a vehicle for distributions. And the reason why it's set up that way is because it has those limitations, and you can even see that first that third bullet point down there. If the administrator prepaid card is used to obtain cash, the withdrawal counts as unearned income. So usually we want to limit that. So we don't want to allow that because that's going to come out as unearned income and take a deduction off that SSI benefit. So that's why the TrueLink card has been named in the rules as a way to make distributions that doesn't count as income because it has the ability to put those limitations on it and protect people. And that's again a reason why the company was started, and it still exists today. It is a great way to protect folks, even if public benefits aren't in play. Like Allison said, if someone doesn't like Medicaid, they don't think that they need to protect those government benefits. Well, you can just use the card as a way to protect assets from folks from financial abuse. Like I said, I've been going to these conferences, and there's always a session on how sophisticated scammers have gotten. And when they find somebody they can take advantage of, they're going to hit them, and they're going to get hit hard over and over again. And so that's, again, why the TrueLink card might be a solution even for someone that doesn't have a special needs trust.
So, a couple of questions that we get on a regular basis is, can I have my Social Security benefits or SSI benefits direct deposited into a special needs trust? Or can I have my Social Security benefits or SSI benefits direct deposited into the ABLE account? The answer is no. Now, I've seen it be set up incorrectly by mistake and then kind of unraveled, like once the Social Security Administration saw that. So, you can move money around once that money comes into an ABLE account, to a first party special needs trust or that kind of thing, but direct deposit. So that's, having said all that, what my question is for the TrueLink account, could you have your public benefits direct deposited into the TrueLink account or not?
We have a special type of account for rep payees. It's kind of the role that that person has. So we do have the ability to receive those, but it is a specific type of card that you'd want to set up with our team.
Got it. Okay, thank you.
No problem. So I just want, with the time left that we have, I'm gonna maximize this again. I am new to TrueLink, and they gave me an Apple computer, which is not something that I was familiar with. So I will pull this up. This is if you were the administrator of a TrueLink card, this is what it would look like from your end. So I'm just going to take like 10 minutes and kind of give you the quick tour of all of these kind of all the cool bells and whistles that comes with this. So what would it look like if you opened a TrueLink card is exactly this. So when you log in, it would show your transactions. So you can see here, these were transfers to the card. This was a purchase at Walmart. You can click on this transaction detail. This is a charge. Please feel free to email if you have questions. If maybe you're like, oh, shoot, I didn't realize that I didn't have a limitation set on Walmart. We can always allow or always block just directly from there if it kind of was a surprise for you. And I'll show you where you can set those merchant settings. And to Allison's point, if we're trying to maintain these benefits and we want to make sure that we're putting receipts on everything, you can always add a receipt and again keep them here in our system. And it has all sorts of the security on that we take very, very seriously. So that is protected information. You can add receipts and you can use our platform to keep those records clear. And we obviously have a lot of different reporting tools that I will also show you. So when you want to fund a TrueLink account from another bank account, you can connect those directly. So the funding, if you want to connect that, is done through a program that we use called Plaid. So if you want to connect a new bank account, you can log into your bank and just connect them directly through Plaid, or you can just put that information in as you normally would with a routing and account number. Then that's connected to your TrueLink account. Then you can make deposits onto the TrueLink card directly. You can also schedule those out in the future. So if you want to schedule a transfer in the next 7 days, recurring transfers or a one-time transfer, then you can see all your transfer history there. The way that you can schedule that is you can select which account it's coming from. So we'll use my account onto Wilbur's card. You can put the amount, then the frequencies. It can be one time, weekly, monthly, twice every month. I love that they spelled it out that way, or when the balance goes below a certain amount. I never know what bi-monthly or bi-weekly means, is if it's twice every month or twice a month. So the twice every month, I love that option. I thought that really solves a lot of question marks on terminology. All right, so the videos are in the way. All right, we're gonna get out of that screen. Sorry, I'm working on one screen today. So that's how the funding works onto the TrueLink card, and then generally when you put in a transfer, it'll tell you funds will be available the next day, or yeah, the next day. It's usually 24 hours, just depending on the bank and the way that it's being transferred. So that's how funding works. The spending settings, I think this is kind of the heart of the TrueLink card. This is where you can, someone asked about cash withdrawals, you can block them or allow them. Again, if you're not worried about public benefits, let's allow cash to come out. But if we are worried about public benefits and we don't want that income hit, we would restrict those cash withdrawals. We also have a restriction for cash inside a bank. So you might not be able to use the ATM, but you also can't go in and get funds off of that or cash back at the time of purchase. People are always going to find a way around whatever limitations you put on them, but we're doing our best here to try to figure all those out. If you do allow cash withdrawals at the ATM, you can put a limit on those. You can put the transaction limit. You can also set daily, weekly, or monthly limits on what can be spent off the TrueLink card. Yeah, Allison.
Couple of things. One person says, Plaid scares me. Is it secure? And another person says, is there a limit on how much money can be transferred to the card?
Yeah, if you don't want to use Plaid, I totally understand that. I too am a little fearful of all these connections to bank accounts. You can just put your routing number and account number in there as well if you don't want to use Plaid. There is a limit. I wrote those down. There's $20,000 a month that can be put on the card, and the transfer limit is $5,000 daily. So $20,000 a month, $5,000 daily, and you can add up to 3 bank accounts as well. So I wanted to make sure that I had that right in front of me because I knew that question was coming. So if you have certain merchants that you want to set up exactly how much money can be spent, so I set this one up yesterday. Juan's Flying Tacos, or it's actually Flying Burritos, is a restaurant in New Orleans, but we're only going to allow $50 for tacos. We're not going to overdo it on tacos or burritos. So you can add those merchants. We have a lot in the drop-down menu where you can set those settings specific. blocking all purchases, allowing all purchases, and then allowing all purchases except above the spending limit. So you have really a lot of control even on those specific merchants.
And I just want to say here that this is good. Not all families have the same issues with their loved one that they want to have access or to have this TrueLink card. But some families do have a loved one that has spending issues. So maybe they block Amazon, or maybe they have addiction issues. So maybe they block alcohol and tobacco or bars or other things that might not be what you are intending the money for. And so this is going to have some freedom with protections and rails is what I like.
Yeah, I like to refer to it as guardrails. We're putting
Hmm.
guardrails on where the money can be spent. And you can even do it by category. So we have a scam watch list that we're developing every single day, and we're building that list of scams that are going on. Do we want to allow online and phone purchases? So to the point where maybe someone's getting hit with charitable calls every day, they're sending money through the phone. We're gonna disallow that. We're not gonna allow that. We're not gonna allow international transactions. No Russian, scammer's gonna come in and take money off of the TrueLink card. Then we have various categories that if you want to just block the whole type of merchant, and the merchants, when they're accepting a payment, they have to fill out what category type of store they are. So that's where these are coming from. So bars and liquor stores, financial transactions, gas stations at the pump, gas stations inside, because a lot of times you can go get cigarettes inside. So, or you can buy liquor at the gas station, but we just want to allow it at the pump. We can do that. Gambling casinos. So you can see there's a whole lot of just merchant categories that we can also block and allow. So it really gives the administrator a lot of control over where the card is being used.
So a couple of things I think we need to address a little bit further is, cash distributions or paying our child with a disability directly and why that's usually not how it goes down. So what did Jim mean in reference to taking out cash can be considered income, namely for SSI? And I mean, it could flow over to Medicaid as well. So that's the important thing. So the general best practice of what we see is that a special needs trust might pay for things for the benefit of said child, but doesn't send the money to the child to pay the bill. Like they might pay the rent. It might pay for services, day programs, or other things like that. Where the able account, this is where they all work together. The able account, you can make a distribution from the able account to your loved one with a disability directly, and it won't be counted against them for SSI purposes. Of course, you still don't want them to have more than $2,000 in their name when the end of the month is over, like when the first of the month rolls around. But I think the overall goal, Jim, is to avoid direct distributions to an individual with a disability. Do you agree with that?
Exactly, and that's where the TrueLink card comes in, and those rules that we looked at in the Palms. It specifically says that so long as we looked at that one line item that says if there are distributions of cash using the TrueLink card, that's going to count as unearned income, which is going to result in a reduction of SSI and could completely eliminate that benefit. So, Allison, you're absolutely correct.
Oh, one more thing I just got to add in here. Zells matter too. I don't know about you guys, but my kids are always asking for Zelle. Can you send me money for gas? Can you, whatever, And yeah, that counts. So if the kid
You
is
can
on
TrueLink card.
SSI and you are zelling them money, when you have a financial review with the Social Security Administration, it's probably going to come back and bite you. So there's got to be more effective ways. The ABLE account is going to be more effective with that kind of thing. Okay.
Yep, and you can use a TrueLink account for that as well. So the top line alerts. So these are alerts. So when somebody is using the card, you can set what type of alerts you want to receive. Alert with transactions over a certain amount, when the balance drops below a certain amount, when someone is getting cash out, when the funding is happening. You can also get alerts on the different block transactions. So block transactions, if there's insufficient funds, someone's trying to use the card with a bad PIN, or the card gets declined. And then you can get those by text, email. And then we also have folks that manage, so we have beneficiaries of pooled trust. They're managing like 15, 20 of these cards. They don't want a, a notification each and every day. So what you can do is just do a once daily digest if you don't want to get a text every time someone's using their TrueLink account that you're managing. The reporting, again, that Allison mentioned is super important. When you get to the end of the year, maybe SSI wants to see exactly how everything was used. You can do a report that can, and they might just say, tell me everything that happened between April and June. You can set that up here with a transaction with a start date and end date. You can download that on there. You can also do block transactions. You can do monthly statements, and then you can store your receipts in here again if you want to use this as kind of your software to manage all those expenses as well.
Okay, Jim. So does the TrueLink require a trust or enable account?
It does not. And again, most people that use TrueLink accounts generally are using them for special needs trust purposes because because again they're named in the palms. It's a great way to get distributions out of those trusts. But there's a lot of people that just have a loved one that they want to make sure they're protected. Like I mentioned earlier, the origin of the card really started out helping folks with memory issues. Folks with recovery issues use these cards as well, so they're coming out of addiction. They're on the path of recovery. With those cards, you can block liquor stores, you can block bars, and then maybe they go in, they're having a relapse, they're saying, "Hey, I want to use this. This is the only source of cash they have." They go and use this block. They're like, "Okay, I'm good, thank you. That's I just needed a little bit of reinforcement on my recovery. Turn around, go back home, and that might have just saved them from a relapse." So you can use these for any purposes, but again, because of those income rules on SSI and using the special needs trust, that's really where these cards kind of evolved into the majority of our users are coming out of special needs trust, but they can be used for all sorts of different purposes.
So one person says, "Oh my goodness, just to be clear, if we take money out of the SSI deposit to teach them how to use cash, it counts against them." So I think I'm talking more like if we're zelling money. So like if you're the rep payee, if I'm the rep payee of my kid and I'm zelling money to them, that's where it can get wonky with the Social Security Administration. So so to her point, let's say that she's the rep payee for her child and she gets the SSI money and she wants to put some of that SSI money to the TrueLink card for them to be able to use that. Is that going to count against them?
Again, we have a special type of account that you can just have the rep payee have those deposits received on that specific account, and then those are just spent directly out of there. And we don't have kind of that intermediary step where it actually belongs to somebody in between.
So in
Uh,
that example, then the kid would have the TrueLink card and they would be able to spend within the guide rails that the parent has set up on that account.
exactly. Exactly.
Okay. One person says, "I want one for ISS outings." That's a great idea. Some people, um, have a credit card that their kid uses and their kid is very trustworthy and they're not a spendthrift and things like that. And other people are not in that boat, right? Like that's not a thing. Like we're not doing that, right?
Well, and yeah, I was just at a conference and I was teaching, and somebody brought up the point that they wanted them to build their credit history, and they were in recovery. Well, they built up their credit history, they increased their max, and they went on a party binge. And so that that in as far as the original idea, it was good. We want to build up credit history, but it also allowed them to increase their credit max, and now they're $60,000 in debt because they went on a party spree. So all these things again, we're playing the game. Like Allison said, we're putting a puzzle together. We're using all the pieces. Each case is different, and they might not always turn out the way that we think. We live and learn through all of these different examples. The one thing I did want to show that if you need to deactivate a card, you can temporarily deactivate the card. Um, if you want to turn it back on, it's an instant turn back on. So maybe someone lost it, but we want to reactivate the card now that they found it. We can do that. We can order a replacement card. We have particular beneficiaries that lose their cards very regularly, and we're more than happy to get those sent out. We can permanently close those as well. So that's what I wanted to cover with that, Allison. I think we're coming up to our time. Yep, we have 1 minute left, so I will turn it back over to you.
Yep, we just have a few final slides. Everybody's going to get a copy of today's slides and a link to the recording. The slides will have a link to our upcoming webinars where you can register for any upcoming webinars. It'll have a link to our YouTube channel, which I also put in the chat box as well. We work on a collaborative team here. We always offer free personalized consultations. So if you need to take a deeper dive in your planning and kind of where you've been and where you're going, we're happy to partner with you and kind of pick up where you left off. Some people have done a lot. They just want a second opinion or a look under the hood because they didn't work with somebody that was nuanced and special needs. Some people are just getting started. Some people just need to get pick back up where they left off. So wherever you are, we can definitely help you. Well, Jim, this has been wonderful information today, and thank you everybody for your questions in the chat box. I did get one today that said, can we have this webinar in Spanish if possible? And what I think is possible on our YouTube channel, I think you can listen to our webinars in any language you want. So I
That's
wanted to
cool.
mention that. And I don't trust the AI converters for that, and I'm afraid that the slides would say something ridiculous, so I typically don't convert them to Spanish. But that is it is available to listen in Spanish on YouTube. Let me see if there's anything else. Best way to manage a Texas Able account. Are there better Able accounts? How do I switch? You can switch. We can help you with that. That's probably an offline thing. And we do take a deep dive of how do we get distributions and like what is the best practice of when and how to get those distributions. These are a few things that you're just going to want to keep on your radar. We've got webinars on every single one of these topics, so you'll want to check them out. Lots of information out there, and if you ever feel like it's information overload, that's why we have that YouTube channel. So that way you can kind of organize your thoughts and listen to the things that are most important to you for the step that you're on in your journey with your loved one. So on our last slide, you'll see the QR code. If you take your camera over that QR code, it'll take you to a calendar where you can schedule your free personalized consultation. So we're out of time for today. Thanks again, everyone, for being here today. Thank you, Jim, for this valuable information. And you guys are going to want to reach out directly to TrueLink. They have a great website, so you're going to want to check that out. Thanks, everyone, and I hope you have a great day.
Thanks, everybody.
Bye now.